Speaking of tech companies, there's one we always have to talk about. Wednesday night was supposed to be Tesla's big investor day, and they make all their big announcements and everything else. And apparently, it not only started; it was 4 hours long. It started late, and it just fell completely flat with the investor industry. Partly
Well, yeah,
because
not to mention,
everybody thought they were going to see a new car.
yeah, it felt
And
a bit
no new
flat.
car rolled out. I mean, Steve Jobs always had something in his pocket to show you, and Elon didn't.
No, there were a lot of people on Twitter that were calling this the anti-Apple event, just sort of the opposite. And trust me, it wasn't just Tesla.
And finally, something old.
Right. It wasn't just Tesla investors that were dragged through this. Those of us who cover the company for a living, it was a long slog to stream this thing and watch it and wait for something. And I get it. They laid out how the manufacturing will change and get less expensive and this, that, and the other. But you really know investors wanted that one big thing, whether it was a cheaper car or a look, deeper into the Cybertruck. And it just didn't get it. And I was really surprised because even up the road, and this is what we talked about last week, when Tesla said it was going to take over that Hewlett-Packard building and sort of change from the past to the future, they not only drove out a Cybertruck here in Silicon Valley, they drove out one of those giant semis that Tesla's making, sort of two nods at the same time to the future. But they didn't even show these to the public during the actual 4-hour plus event.
Hi, everyone, and welcome to the Friday, March 3rd installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove. And our host, as always, is the Silicon Valley Business Journal. Okay, Scott, we got a lot of things to talk about this week, mostly financial, but there's one big political one that kind of surprising. Apparently, the U.S. House Foreign Affairs Committee voted Wednesday along party lines. It's interesting because it's a reverse of what the expected party lines would be, to give President Biden the power to ban social media app TikTok. I mean, that's a big setback for TikTok, but it's kind of surprising because it was the Republicans who voted to give a Democrat president that power. And the Democrats, his own party, went the other way. Why do you think that happened? And why is this going on now?
I mean, I think I would back up a bit and say this is potentially really bad news for TikTok. I think this is largely something that the two sides agree on. Maybe not vote for vote, blow for blow, but ever since the Chinese spy balloon was seen in the sky, there's been an extra set of eyes on TikTok, which was already in the spotlight for spying concerns. It hasn't been proven, and the company insists, even though they're owned by a Chinese company, ByteDance, that they do not share data collected with the Chinese government. But both sides agree TikTok is dangerous, not just for our kids, but for our data. You've noticed perhaps in recent weeks, laws coming down saying that it will be banned from government devices, not only here, but in Canada as well. Not a huge miss for TikTok because after all, our government, folks tend to be older than the target audience, but that is saying something. And now this potential for an out-and-out ban against TikTok is really putting the heat on this company, which so far has insisted ByteDance is going to be the owner and it's going to have sort of its American feel, but it has not spun out the company. And there's so much value that can be unleashed in this thing. It is a juggernaut. Something like 2/3 of young people are on TikTok, and it's got 1 billion monthly
users in the United States.
Yeah, every month. I mean, it is huge. It is beating Netflix. It is beating the movies. It is beating going outside and playing. It's what our young people do. And it's interesting. TikTok also itself sort of threw a bone at people at parents saying, all right, after an hour, if you're under 18, we will stop the TikTok session and shut it down unless and until that young person finds a passcode and enters it. Not a real hard barrier there, but nonetheless, an acknowledgement that young people are on this site for hours at a time.
I had this vision, the balloon goes over the United States trying to get a look down into probably our ICBM silos in North Dakota. But it's just, they're all closed. The lids are on them. But you can imagine some USAF airman in one of those silos submitting a TikTok video of his day.
That's the thing. And there were so many jokes when the spy balloon was overhead saying, oh, we're all worried about the spy balloon, but we're on TikTok 3 and 4 hours a day, just feeding our data to a Chinese-owned company. And again, TikTok says it does not share any data with the Chinese government. But, you know, you have to understand this fear, you know, and President Trump brought this up when he was in office. It's still around now, this concern about China and the data privacy. And it really does unite both sides of the country. It's almost impressive that it can do that in such a divided time.
Every person I know that's ever run a business in China gets that little visit where they're informed there's going to be a Communist Party member or one of their kids on the board of directors. So the notion that somehow TikTok can divorce itself from the CCP seems kind of a shallow argument. I'm not buying it.
I agree. And I think when you talk about, and this, by the way, TikTok is not just a juggernaut in terms of the time spent on it, what people call stickiness of a website or an app, but it's a huge advertiser. You know, it pulls in big advertising revenue. It's even big for search, which we knew is very lucrative. So you think, wow, this could be the next trillion-dollar company. But I think first, before, you know, the New York Stock Exchange allows it to go public, it's got to spin itself off from ByteDance. And ByteDance probably doesn't want that to happen. So I don't really see how it unlocks that value unless and until
publicly display clean linen. And it's just too iffy right now. Okay. A federal official came out. By the way, that bill was sponsored by Committee Chair Michael McCall, if you want to send letters to anybody. Okay, so a federal official said that the hotter economic data right now, and employment and unemployment and all that, will warrant even higher rates, interest rates. He's saying job markets, it's federal government, Christopher Waller, job markets are still unsustainably hot, and the progress on bringing down inflation may have stalled. Well, that's kind of chilling news. We thought we were getting out of it. We thought that, you know, inflation numbers had flattened and they were going to start tapering off, but now it looks like, and it's having secondary effects. Mortgage rates have now jumped back over 7%, which is an astounding number. Yeah, it's risen to 7.1%. It's closely following the yield on U.S. Treasury notes, which are also reflecting inflation. This is not good news.
I mean, it's not good news in some ways. Certainly, prices are still high, wages are still high, and, you know, say what you want about the tech layoffs recently, but employment is still very high. You put all those things together and prices stay inflated, and the Fed is working against that by raising interest rates. The one thing, and we've talked about this a lot, that you can do right now is look at your credit card bill. Any debt you have is going to be very high. Credit card bills are now running something like nearly 20% interest rates, maybe even higher. And if you can pay off, if you can pay that off, you're instantly getting a return that you wouldn't get on a stock or anything really. But that's the reality right now. And mortgage rates at 7% are high for what my generation has known. But I complain to my parents and they poo-poo it and say, we paid 18% back in the 80s when we were buying houses. I get it. But it is still high for this generation. And it's something I think we're going to have to deal with for a while because the Fed has not brought down inflation to that 2% level that it wants to see.
Well, we're starting to get to that 70s mentality for the average person, which is you're not thinking about investments per se or purchases. You're thinking about almost arbitrage. How much debt should I carry? You know, what should I pay down? You're thinking money, management of money, as opposed to the management of capital and material and ownership and all that. We become a society where we're watching the interest rates every month, and we haven't done that for years. And now we're thinking about it every week.
But isn't it perhaps because we haven't had to for many years? I know many people, not only younger than me, but even my own age, who still carry, say, college debt, and they put a lot of debt on their credit cards, and they carry debt because the interest rates have, for our entire lifetimes, been really, really low. And now, watching that interest rate, to an extent, it's painful, but maybe it's also healthy. I mean, after all, do we really want to carry all this debt around? I would argue no.
It's a reassertion of reality. I mean, we spent so many years, most of your lifetime, interest rates are what, 1%. Who cares? I mean, that's not something I have to think about. Interest rates, race moving up towards 8% again, and eggs are, you're selling your car to buy eggs. Now you start thinking about it a lot. Now you start waking up at 3 a.m. worrying about your interest debt.
Right. And it's bad for individuals to carry a lot of debt, and especially when that debt is now getting more expensive. But also, that's why we've seen so much of a hit in the stock market, because it's expensive for companies as well. Money is not nearly as cheap as it was just a couple of years ago for a long, long, long time. And this is the new reality for companies, especially tech companies as well. I don't think it's a coincidence that we're seeing a pullback in tech stocks, and we're seeing a rise in tech layoffs as money gets more expensive to borrow.
Speaking of tech companies, there's one we always have to talk about. Wednesday night was supposed to be Tesla's big investor day, and they make all their big announcements and everything else. And apparently, it not only started, it was 4 hours long. It started late, and it just fell completely flat with the investor industry. Partly because
not to mention
everybody thought they were going to see a new car.
Yeah,
no new car rolled out. I mean, Steve Jobs always had something in his pocket to show you, and Elon didn't.
No, there were a lot of people on Twitter that were calling this the anti-Apple event, just sort of the opposite. And trust me, it wasn't just Tesla.
And finally, something old.
Right. It wasn't just Tesla investors that were dragged through this. Those of us who cover the company for a living, it was a long slog to stream this thing and watch it and wait for something. And I get it. They laid out how the manufacturing will change and get less expensive and this, that, and the other. But you really know investors wanted that one big thing, whether it was a cheaper car or a look, deeper into the Cybertruck. And it just didn't get it. And I was really surprised, because even up the road, and this is what we talked about last week, when Tesla said it was going to take over that Hewlett-Packard building and sort of change from the past to the future, they not only drove out a Cybertruck here in Silicon Valley, they drove out one of those giant semis that Tesla's making, sort of two nods at the same time to the future. But they didn't even show these to the public during the actual 4-hour plus event. And I think that's what people wanted, were a spin in the Cybertruck and maybe a $25,000, $30,000 car.
Yeah, I think this is proof that Elon's getting a little distracted. I once was on stage in front of 5,000 people at TiCon, introducing and then interviewing Elon. And before it started, he took me aside and said, "Mike, introduce me, but I'm not going to come out on stage the usual way. Just introduce me and hold on." So I went out on stage, and 40-foot screen behind me. I said, "Ladies and gentlemen, Elon Musk." Roar the crowd. No Elon. Then all of a sudden, this was at the Santa Clara Convention Center, a beam of light shot into the back of the convention center, and Elon drove into the main ballroom there, drove up the center aisle, jumped out, and ran up on stage. Now that was the Elon Musk that was. And I'm not seeing a lot of that. Now he carries a sink in the Twitter. I mean, where's the showman that he used to be? Is he just bogged down with too many different things? I mean, he had a successful rocket launch 2 days ago. I mean, there's just too much going on in his life that he's not being the showman anymore.
I mean, clearly he's not the showman he once was, and he had all sorts of opportunities to drive all sorts of things onto this giant stage yesterday or Wednesday in Texas. But part of it is, I mean, clearly, I think, and again, I'm not a Tesla investor, but if I was, I would question where the focus is these days, because he's facing lawsuits, not just on the Tesla side, but now on the Twitter side. And there are all these concerns about Twitter's viability. Tesla is certainly doing fine. Its stock price is back up. He's the richest person again. But there's just so many balls being juggled in the air. I'm amazed, and I'm just someone who has one job, and yet we all sort of struggle day to day. There's got to be some
he's talking about starting a alternative AI writing program that doesn't have the censorship.
Right. He's also, I believe, a co-founder, or at least an early investor in OpenAI. So he's got the whole ChatGPT thing happening. He's everywhere, and I know that's his goal. And he's succeeded in being everywhere and in every news cycle. But I can see where many people, especially Tesla investors, feel that he's just being pulled in too many directions at once for one individual.
Now, he did announce a new a massive giga battery plant in Monterrey, Mexico. I'm a little surprised he didn't just go across the border, Tijuana or Tecate, with those Maquiadora giant factories they all have down there. But one positive analyst said what he's putting into place, this whole infrastructure and manufacturing, is going to enable him to keep dropping prices on Tesla vehicles, and other EV makers are not going to be able to catch up. He's going to own this space.
If that's true, that takes care of, I think, the two biggest barrier to entry to EVs. One is price, and you're right. As we see more of them, like you just said, that'll lower the price, but also increased competition lowers the prices. And two, charging, the availability for people to charge and charge quickly. The other thing that Tesla announced is opening up their supercharging network to other cars. And we saw some really interesting videos on Twitter this week of, say, Rivian truck owners driving right up to a Tesla supercharger, pulling it out and charging. And those are difference makers when it comes to, let's say, you sitting in the Bay Area and having family in Los Angeles or Las Vegas and saying, I can take an EV back and forth easily if it's a Tesla because I can charge rapidly, but not with many other EVs who, even with big range, still need a lot of time to charge wherever you are. And the ability to rapidly charge could not only be a game changer in bringing more people into the EV market, but it could be a big revenue source for Tesla as well. And they mentioned it in the
platform. He's getting vertically integrated that way. Is kind of interesting.
Well, and it's sort of a category killer almost, because if everyone can do this on the Tesla, then maybe Polestar or GM or VW or BMW or whoever doesn't get into the supercharger game. And with everybody using it, it becomes a significant revenue generator for Tesla.
Yeah.
Possibly.
Needless to say, though, the world wasn't too excited by that. The announcement day, stock was down almost $12, and almost 6% in value. Okay, the next one is an interesting item came out. We don't normally talk about this, but it's the ISM Manufacturing Survey. And the report came in at 47.7 for the fourth consecutive months of deep contraction. The turning point is typically 50. So coming in at 47.7 means that manufacturing is still sliding in the United States, and it has been for a while. And that augurs bad things down the road. I mean, until we get our manufacturing level back up, I mean, stocks are climbing, tech companies are climbing, and certain other sectors are. But if manufacturing doesn't come back, then we're back to the old problem of where do we get our stuff?
Well, I mean, when was the last time you heard a giant manufacturer say we're going to open a new manufacturing facility in the U.S.? It just hasn't happened for a while. And you see
Wasn't it supposed to happen? I mean, wasn't that the big thing? Was everybody went offshore? Now they're coming back onshore, and manufacturing is coming back to America.
I mean, every politician says, and not just those who say America first, but every politician, period, says we're going to bring this back here. We're going to make whatever it is, from Macs to cars to everything here. But those are words, and dollars are dollars, and companies are still fleeing the country to save money. And so you just haven't seen a rise, and the figure you just stated shows and proves that we just haven't seen a rise in U.S. manufacturing in a while, despite what feels like there should be momentum because people talk about it a lot, but they're not doing.
Okay, now This one, talk about a company getting good and bad publicity all at the same time. Salesforce. Now, on the good news side, they blew out Wall Street this week. Their stock just went right through the roof. They beat all the numbers. Stock surged Thursday, 12%. Is now up at about 190. Everybody was in love with them. They beat the Dow. Mark Benioff was giddy with excitement about all this good news. At the same time, the Wall Street Journal comes out with a cover story that says, Mark Benioff used to say, we're all one big family. He told all of his employees he wanted to employ them forever. We're all in the same boat. And then he starts laying off thousands of people. I mean, it did one have anything to do with the other? Did the layoffs help them hit their numbers? I mean, it seems like they were too recent to do that, but perhaps they did. Or is the fact that Salesforce disbanded their merger and acquisitions committee, which bought things like Slack and MuleSoft, which haven't really done a lot for Salesforce's bottom line. What do you think?
Well, so the timeline is kind of significant here. They announced the layoffs at a time when there was a lot of management reshuffling, and it looked like Salesforce was really, really in trouble. And that was the speculation. And a lot of people were looking towards this earning report that was going to come out to almost be a nail in the coffin for Benioff and Salesforce. But surprise, surprise, after layoffs, after getting rid of the M&A, and they came out and just killed it. And all of a sudden, it has the biggest day they've had in years and years. And I think...
And it shut up those 5 activist investors that were trying to boot Benioff and restructure.
Right. They even got praise from the activist investors. How often does that happen? And I think people were assuming, because the vultures were flying overhead, that this earning report would be a disaster. But maybe trimming the sails by as much as Benioff did was the right move. And it's hard to knock the long-term management skills of that guy, because Salesforce has been an incredibly successful company. And there have been a couple of times when people really doubted what he was doing. And yet he pulled through with this amazing earning report, and perhaps not only signaling a slowdown in growth by literally laying people off, but also by saying we're not going to buy companies for a while, gave investors even something else to cheer, because this is a company that was a tremendously strong growth company and is admitting this is just not the time right now to grow all that quickly. And the stock price was rewarded.
Well, maybe they finally earned with these numbers their giant phallus tower in San Francisco. Benioff even said, we have hit the hyperspace button. That's, you kind of got to knock on wood when you say something like that, because that's like, this ship is unsinkable. But still, he had reason to celebrate, and it's good for San Francisco, certainly, which has not had a lot of good news lately, and it's good for the employees of Salesforce. I get the feeling the market is really rewarding companies for becoming more disciplined.
Well, look, I mean, yeah, I think the 2 biggest examples are both Salesforce, and then just a little while ago, Meta, which announced, the year of efficiency, whatever that means, but it curbed its spending on the metaverse, which was kind of a money pit. It did layoffs as well, which were very painful. And boy, that stock price practically doubled since the year started. And that's just an amazing, amazing jump for a company that size with that many shares out there. And so it was almost like a lot of money was waiting on the sidelines for these companies, as you say, to get more disciplined. They did. And investors are really, and the founders and the executives are really reaping the rewards.
I saw a really interesting article saying, who's going to win the AI wars? I didn't know we were in that war yet, but apparently the first artillery barrage has begun between Meta and Google, and throwing in Microsoft on the side.
Right.
What surprised me, I automatically assumed it would be Google because of what Meta's been going through. Almost all of the observers picked Meta, picked Facebook to win this war.
I mean, I would say, and I realize I'm going against the grain here, and I am by career, it's supposed to be skeptical about this stuff, but I would only put Meta in the dark horse category. They don't do things like create in-house stuff all that well. They buy things really well, i.e. Instagram, i.e. WhatsApp. But when they come up with a product, it's often something they try and then get rid of. And if it has anything to do with data and privacy, it's been really, really bad.
When they come out with it, it looks designed to steal your data and monetize it. Yeah.
Yes. And so for Microsoft, we don't think of it in terms of that as much because Microsoft is not a social network. Google has YouTube. Those are data and privacy concerns there. But search and AI do go together well. Social networking and AI so far have not. And that's why I would put Meta in a category where I wouldn't bet on their AI. I would just bet on their advertising generated cash flow. It's just been gigantic. And I don't even think they're really monetizing WhatsApp all that much. So woof, this could be a big, big year for them. But the more they try to get into kind of sexy stuff that hits at our privacy, the more we're going to back away and say, I just don't trust them. I trust them even less than I did last year, which is saying something.
Yeah. Okay. Finally, in the miracles do occur category, Intel did very well this week, their stock rose 3.4%. Well, we were all but standing over Intel's open grave the last few months, but something's going on. I mean, the stock is up.
Yeah, I mean, 3% for Intel's current stock price is a pretty low bar to set, but
there's a positive sign in front of that number for once.
True. I don't know. Remember, think about where even in the last couple of weeks we've seen the money go. NVIDIA, because it's hot with AI. Qualcomm has been hot for a long time because of mobile. Intel chips are just not what people are reaching for right away, and they need to get in those games. And if they can, they're Intel. They set the world standard for growth and manufacturing, et cetera, et cetera. They just haven't done it in years. And so we know the DNA is there, but are people really reaching for them first? I just don't know.
By the way, after taking that enormous hit last week, NVIDIA is now a best buy, I've noticed among analysts. So that may just have been one step, but the usual one step back and 3 steps forward for those guys.
It's been that way for them for years. Yeah, they're strong.
Okay, that's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, and LinkedIn and YouTube. Have a great weekend, and we'll see you next week. Bye-bye.